Hello, everyone. Welcome to the 2026 Payroll and Labor Law Changes. I'm Shauna Coronado, your host for today's webinar. And if you've ever felt overwhelmed by changing labor laws and compliance requirements, you're not alone. Today, we'll cover the most important 2026 updates for construction payroll to help simplify your compliance workflow. Now, a little housekeeping. Please submit your questions over in the chat area for our Q&A session. The awesome Michaela O'Leary will be managing the chat area, and she'll get all the pertinent questions sorted. Now, the agenda overview. Today, we'll cover OBBB tax deductions, demographic reporting deadlines, AI regulations, paid leave, captive audience meetings, wage and hour updates, California-specific changes, and so much more. I'm pleased to introduce our resident expert, Andrea Porter, who will share critical updates every construction payroll manager needs to know. So over to you, Andrea.
Good morning, Shauna. How are you doing today?
Good.
Good. All right, so we'll start out with the one big, beautiful bill from last summer. There were several things in it, but for payroll specifically, it has this above the line federal income tax deduction for tax years 2025 to 2028. Most of you are aware that withholding is not impacted, so this isn't impacting the withholding for employees' paychecks, but it's a federal income tax deduction for the qualified tips and overtime compensation. So for qualified tips, these are true tips only, not like a restaurant service charge, fees, or automatic gratuities. It is for what we think of as tipped occupations, and the IRS did come out with a list of specific tipped occupations that it applies to. So, for example, you're not going to be able to tip your accountant and have them report that as a deduction on their tax return. For qualified overtime, it's a little bit more complicated. So the qualified overtime is only overtime required under the Fair Labor Standards Act in excess of the regular rate. So we're talking about the half portion of time and a half. It also doesn't include overtime required by state law, prevailing wage, a collective bargaining agreement, or company policy. So for instance, if you pay overtime or double time when an employee works on a holiday, that's not required under federal law, and that's not going to be considered qualified overtime. So the IRS has the deduction caps listed there for when the employees can report on their tax return. And employers are required to provide the total amounts of these qualified tips and overtime to employees, but there is IRS transition relief for 2025. So since this law came about in the middle of the year, it obviously left everybody scrambling with, well, how do we document this? And even the IRS. So they have not updated the Form W-2 for tax year 2025. So we've seen accountancy guidance that says actually don't provide it. So if it's not required for 2025, don't provide it at all. That has its own complications then, right? Because then you're going to have employees asking you what's their qualified overtime or qualified tips. So employers will need to kind of determine for themselves how they want to do that. For eBacon clients, this is something that our development team is actively looking at and we're reviewing, and we will have more information forthcoming. In the meantime, IRS did issue guidance on how individuals can calculate their tax deductions. So for tipped income, they provided some examples for both tipped income as well as overtime. If someone's truly just getting one overtime rate and it's just federal overtime, for example, they could take their total overtime for the year and divide that by 3, and that would give them their qualified overtime. Or if they have double time, they could divide that by 4, and that would be their qualified overtime. But if they work multiple rates, which is very typical in construction, it is going to be more complicated. So.
Mm-hmm. Without a doubt. Andrea, can you tell us more about the annual demographic and pay data reporting?
Yeah, so there's not a whole lot new here. This is just kind of a reminder of the deadlines for these different reports that are required. So federally, for employers with 100 or more employees, or federal contractors with 50 or more employees in certain levels of federal contracts, they're providing annual demographic data, so that's your sex and race and ethnicity by job category. It's usually due in Q2, but they seem to change the dates every year, so it's something to keep an eye on so you know when that filing deadline is. California and Illinois actually require demographic and pay data to be reported. So in California, it's for employers with 100 or more employees nationwide. So even if you have, say, you have 120 employees somewhere else and only one employee in California, you are going to have to file this report. It's also for 100 or more workers, contractors. So think your 1099s, you have to report on them and separately. So you may have two reports that you need to provide. And that one is due the second Wednesday in May every year. In Illinois, this is only for employers with 100 or more employees in the state. And here you're actually filing for an equal pay registration certificate. It's due every 2 years, so it's a rolling deadline. So it was first due in March of 2024. So if you are a large employer in Illinois and you filed for that, you're coming up on your new deadline for every 2 years. And there are some additional data fields required this year. So you want to make sure that you go in and look at those, like the template for filing, to make sure you've got those additional fields reported in. And lastly, in Massachusetts, this is also for employers with 100 or more employees in the state. Their deadline is earlier. It's February 1st each year, but it's much more simple. You only have to file your federal EEO-1 report. You file that with the state directly.
That makes it simple. All right, we are going to have a poll for our audience. What is your biggest payroll or labor law pain point right now? Now, we have several choices, so if you could click one of the choices that apply to you: staying updated on new laws, prevailing wage management, payroll automation, avoiding fines, multi-state compliance, or other, which is kind of random. Look, everyone. By and large, prevailing wage is winning this poll. That's amazing. Okay, we have a few that are saying avoiding fines and multi-state compliance. All right, that's terrific. And it's just to show that we all are having pain points in relationship to this. All right, let's talk about the new change, Andrea, artificial intelligence in the workplace.
Yeah, I think everyone now is using AI in some context, at work, at home. There's definitely a huge opportunity for efficiency. I think we've all seen the benefit of that. But in the employment context, there is also a heightened legal risk for discrimination and privacy claims. So in these states where we've seen the laws being enacted, regarding AI use in the employment context specifically, we're seeing legislation around required notices, transparency, bias testing, audits, record keeping. So things like your AI generated rankings and scores, those are going to be considered as part of an employment decision, and therefore something that is subject to record keeping requirements, as well as discovery in the event of a claim. So some of the best practices, generally speaking, again, speaking for these states where we've seen the laws come into play so far, is notifying applicants and employees of the use of AI and obtaining their consent, making sure you maintain secure documentation of the programs, the data, and then the output used when you're using AI, and establishing clear rules and policies. Provide that notice, be transparent, and then always involve human review. So the AI did it is not going to be a defense in a discrimination claim. The employer is still going to be held responsible. So a couple of things to call out in the states that did enact laws. Most of these do require, notification and consent. Specifically in California, theirs first went into effect this past October. AI data used in employment decisions must be stored for 4 years, along with personnel file information. Colorado's, this one got pushed. It's currently effective June 1st, 2026. Employers must develop a very specific risk management policy, including an annual impact assessment, and provide specific notices. If you're in Colorado and your employees are using AI, and they probably are, even if you're not aware of it, you're going to really want to dig into those requirements. Illinois, it specifies that it's a civil rights violation to use AI that subjects employees to discrimination or failing to notify employees of its use. In Maryland, consent is required for AI-based facial recognition in hiring. And in Texas, the law regulates use of AI systems and establishes anti-discrimination and disclosure requirements. So they're similar, but in some states, like I said, Colorado is probably the one that has the most arduous employer requirements.
The AI regulations vary significantly by state, right? So companies operating in multiple states, what's your recommendation for creating a unified compliance approach?
Yeah, sometimes we recommend state-specific policies, but in this instance, with the opportunity for discrimination claims, I think applying uniform policies across the board for your company is going to be an employer's best bet. And I do want to mention real quick, anytime all of these new laws are effective January 1st, 2026, unless it's noted otherwise. So just moving forward, keep that in mind for the slides, or if you get the slides afterward.
Very good. What about mandatory sick leave?
Well, that's always a fun topic. I spend a good portion of my day on paid sick leave and PTO. Fortunately, this year there were no brand new states. We had 5 states add them in 2025, add mandatory paid sick leave. So I was really happy to not have anything brand new. The general theme, though, is that we're seeing states increase their paid sick leave requirements. They're increasing the number of hours, expanding to apply to more employers or more employees, adding the reasons for use, expanding the list of family members. Like we saw in California, I think 2 years ago, employees can now designate a person, and their designated person can now be considered a family member under the paid sick leave law, and adding requirements for unpaid sick leave. So the new changes for 2026 is Connecticut is expanded to the number of employers. So it used to apply to employers with 25 or more employees, and now that'll be 11 or more employees. And it will apply to all employers in 2027. So if you're a small employer in Connecticut, and here in Connecticut, you're only counting employees in the state. So if you have a remote worker in Connecticut and say you're in Idaho, you don't have to provide paid sick leave, but you have one employee working in Connecticut, 2028, you would have to provide paid sick leave. And then a couple city changes in Pittsburgh. The amount of hours required to be provided is increasing. So the accrual rate is increasing from 1 hour of paid sick leave accrued for every 35 hours worked to 1 per 30 hours worked. And the amount of leave is increasing from 40 hours a year to 48 hours for small employers. Those are ones with less than 15 employees, and 72 hours for large employers, and those are with 15 or more. So unlike Connecticut, Pittsburgh's requirement, you actually count employees nationwide. So again, you're looking at if you have a remote worker in Pittsburgh and you either don't have to provide paid sick leave or you're in a state that requires less, that Pittsburgh employee, though, is going to need to get, or the ability to accrue up to 72 hours a year. So always fun. And then New York City's change, they already have a paid sick leave requirement, but they're adding a requirement for 32 hours of unpaid front-loaded sick time right off the bat for new hires. So you might be like, well, it's unpaid time, big deal. The big deal is that this is job protected time. So generally speaking, with paid sick leave, employees have a lot of protections. And those of you that have experienced this, you know that that's kind of where your pain point is. Just below there, we've listed other states that have mandatory paid sick leave, mandatory PTO, so that's time off for any reason, and then mandatory unpaid time off. So if you're in one of those states and this is sounding unfamiliar to you, make sure you reach out to somebody to get some more information on those. And then we're seeing other types of leave pop up, such as blood and organ donation, prenatal and maternity and pediatric medical care leave. I'm going to talk a little bit more about those on the next slide, but one of the topics we're seeing, really seeing an increase in this year are expanded protection for crime victims. And these are typically like a violent crime. It could be a domestic violence, stalking, different things. You're going to hear me say this a lot. It varies by state, but these states have expanded their protections for crime victims. In Alaska, it's part of the paid sick leave law that just went into effect in July. In California, they expanded its safe time under paid sick leave law. I'm going to talk a little bit about that more when we get to California section. In Connecticut, there's 12 days of safe time available that's paid, but this is a state program, so it's not something the employer is responsible for, but they can go to the state and file a claim to get paid time. And in Delaware, it's 12 weeks of safe leave that's unpaid. And then Washington also added additional protected safe time. So there's really a variety, but this is kind of one thing that I noticed this year that was in quite a few states. So know where your remote employees are working, and remember that your requirements vary by company size, and some cities and counties have their own requirements as well.
Let's jump into another poll. So audience members, give us your answers. We'd like to know, how do you currently stay on top of labor law changes? Internal legal and HR, dedicated software like eBacon, because we help you, third-party consultants, industry newsletters. What do you think? Oh, dedicated software like eBacon. You're with eBacon. Terrific. Oh, great results. Okay. We're still going, and dedicated software seems to be the biggest help. I'm glad to hear that. All right, let's jump into the next slide, which is state family and medical leave.
Yeah, so as I mentioned before, we're seeing an increase in other types of leave, but we'll first talk about paid family and medical leave. So these are programs provided through state assistance, usually funded by payroll tax dollars, but they usually have employee job protection included as well. The new states for this year are Delaware. Benefits claims start in 2026, but contributions from payroll taxes started in 2025. In Minnesota, contributions and benefits both start this year in 2026. And in Washington, they expanded their current program. So it will now apply to employers with 25 or more employees. It was 50. In 2027, it will be 15 or more. And in 2028, employers with 8 or more employees. The number of employees that are eligible for claims will also increase, because now they're eligible after just 180 days of employment. They've also added some specific and complicated provisions with the Federal Family Medical Leave Act. It addresses the stacking of leave. So if you're an employer with 50 or more employees, you should be familiar with FMLA leave and providing that to your employees. And typically you're going to run that concurrently with the state paid program, and they just run at the same time. They've got FMLA for the job protection, and then they've got the state program that might be funding them for the dollars that they're not getting while they're not at work. Washington has said that it runs concurrently only if the employee chooses to. So employees can actually opt to take their Washington paid family and medical leave after FMLA, extending that amount of job protected leave. So I'm sure our Washington clients, or anybody else out there from Washington, I'm sure you're thrilled to hear that. The existing state programs are listed below that. Vermont has a voluntary program, and Maryland, if you're in Maryland, you guys just keep getting pushed back. It's happened a couple times so far, but as of right now, contributions are set to start in 2027 with benefit claims starting in 2028. Parental leave. So I mentioned different types of leave popping up. In Illinois, if you have an employee who needs to take time off to be with an infant in the NICU, you need to provide them with the amount of time listed there on the chart, depending on the size of employer. This is unpaid leave. This was effective in June this coming year. And under a separate law, they specified that lactation breaks must be paid. So typically your breaks are going to be paid time for employees, but you might have, say, hey, it's 15 minutes or less, 20 minutes or less. It's it's a paid break. But if an employee needs a longer time for that lactation break, the entire thing must be paid. That's a new law there in Illinois. And in New Hampshire, they have some parental medical leave. This is unpaid time that employers with 20 or more employees must provide. 25 hours a year for 1 year after the birth of a child for medical appointments related to childbirth, postpartum care, or pediatric medical appointments. So as you can see, in general, just the types of leaves are getting very specific. Parental leave, crime victim, blood donation. It just really points to you really need to know what's going on in your state and where your employees are.
With Delaware and Minnesota joining the states with family leave programs, what should companies do like right now to prepare?
First and foremost, especially right now, you're going to want to get those notices out to all your current employees so they're aware. A lot of times employees don't know this is going on. Most these states I know do, and I think all of them have like an employer toolkit on their website. So you can just go in and it'll have the notices, it'll have templates, everything that you need to do that. If you have an employee in Delaware, hopefully you're already collecting those payroll taxes and remitting those. And then the claims, like I said, will start in 2026. For Minnesota, both the contributions, so you want to make sure your payroll taxes are set up appropriately to collect and remit. And then also ensure your frontline supervisors are aware of this program and have the resources to provide to the employee when they're eligible for a claim, or at least refer them to the right person. An employee is not going to come and say, I need to file a claim for the state's family and medical leave program. You're going to hear, hopefully, from the supervisor, oh, Joe's wife had a baby, he's going to be out for a couple days or a couple weeks. I don't know, but he'll be back. That's what you hear. That's your notice to yourself, like, oh, we need to get this guy information so he can file his claim with the state. And then also you might have other leaves that, that come into play, especially like if you're in California. What else do we need to put this employee on? So those are, I always think, make sure your supervisor are aware of those situations. And I know you're going to hear 3 weeks later, you're like, why isn't this guy working? Oh, he had back surgery. Okay, well, we need to do something. So just kind of keep that in mind to make sure your supervisors are aware as well.
Very good. Let's cover captive audience meetings.
Yeah, so switching gears from when employees are not working to when they are at work. Generally speaking, you can make employees attend mandatory company meetings, so safety meetings, open enrollment, but in these states listed here on the slides, you cannot require that for meetings related to religious, political, or union matters. So employees, if you do hold a meeting, they can't be discharged, discriminated, or retaliated against, or threatened because they refuse to attend. Now, these, I'm not sure if it's all of them, but it might be pretty close. They are being challenged in court based on a company's or an employer's First Amendment rights. And in California, there was an injunction in October that temporarily blocked this law that just went into effect in 2025. It's in a lawsuit filed by the California Chamber of Commerce and some other employer groups. So we're kind of waiting to see what happens there. And that could obviously impact this lawsuits going on against these laws in other states.
Well, these laws are facing legal challenges. So how should employers approach the uncertainty while still remaining compliant?
Yeah, and I think for the most part, most employers are not holding meetings on religious or political topics, but you might be about union matters. And you can still hold a union avoidance meeting, just it must be voluntary. And I think that's the best approach really for any state, is just to make those meetings voluntary. If you do hold a mandatory meeting and an employee doesn't attend, you want to check, see if your state has a law against that before taking any adverse action against them.
Mm-hmm. Makes sense. Let's go on to wage and hour.
Yeah, we have a couple things across the country. So in Maine, this law already went into effect in September. It says show up pay, or if you're in California, you're familiar with it as reporting time pay. But basically, if an employee shows up for work and their shift is canceled or shortened and they don't work as much as they were scheduled for, they need to be paid a minimum of 2 hours of their regular pay or the total pay for the shift schedule, whichever is less. There are some exceptions like adverse weather, natural disaster, if the employee is sick or injured, things like that. But absent of that, if you cancel their shift or their shift is cut short, well, I would say you need to make a good faith effort to show that you let them know that you gave them advance notice, and so you're going to want to document that. So if you cancel their shift and you text them and they don't respond, we would recommend texting, calling, sending an email, and then you're going to want to document that, or you're going to have to do the 2 hours of show up pay and add that to their paycheck. In Minnesota, they made a change to their meal and rest breaks. Employees who work shifts of 6 hours or longer are required to get a 30-minute unpaid meal break. And rest breaks were specified now to be a minimum of 15 minutes specifically, or enough time to utilize the nearest convenient restroom, whichever is longer. That's for every 4 hours of work. So, you know, in certain job sites or in a large manufacturing facility, sometimes it might take longer to get to the bathroom and back than 15 minutes. And if that's the case, then that's the minimum amount of time that you need to give them. But the 15 minutes is going to be the new floor for that. In Oregon and Rhode Island, we've got some new written notices that are required. So in Oregon, employers must now provide a written detailed explanation of all the payroll earnings and deduction codes that an employee may be eligible for. So for example, if you put OT on their paycheck, they need to be told that that means overtime, or HSA-EE, that's the employee contribution for their HSA. It must be provided to all employees and all new hires. So all employees when this goes into effect 2026, new hires moving forward, and then all of your employees annually. Another fun law in Oregon, for any of you GCs out there, the new law imposes strict liability on property owners and contractors for wage theft violations. And that means if your sub didn't pay their employees properly, you could be liable even if you had no knowledge of it. So we've seen laws like this in California, but that's now a new law in Oregon. And lastly, Rhode Island's notice requirement is also a written new hire notice, but this is going to be specific to the employee. So a specific notice including pay, the allowances, deductions, the pay schedule, their employment status. A couple other states have requirements like this. I have not yet seen a template, so if you are in Rhode Island and have new hires there, you'll want to keep an eye on the state's wage and hour site and see if a template comes up. If not, you'll want to dig into that law and make sure you're providing all the information that's required with that new law.
Andrea, Kathleen is asking a question that applies to the slide, so I'm going to ask for her right now. She is asking if this applies to California, meaning the show-up pay.
So in California, you already have one there called reporting time pay, and that's been in place for a long time. So if it's in basically the same thing, and it's now you're going to catch me off guard. Half of the shift, minimum of 2 hours, or half of what they were scheduled for. So I think like in California, if it was an 8-hour shift, you might have to pay them 4 hours, but it's called reporting time pay. And if you just go to, just Google DIR reporting time, it'll take you right to DIR's site with the explanation of what's required for that.
Okay, great. And between Oregon and Rhode Island's detailed payroll explanation requirements, what's the best way to implement these efficiently?
Yeah, I think if it was me for Oregon, I would just do all of my earnings and deductions codes for everybody, whether that specific employee is eligible for it or not. That way you're kind of one and done, submit it out, add it to your onboarding package. Your new hires are going to get it, and then your existing employees, and then just pop that out annually just in case there's any changes. And then for Rhode Island, hopefully there'll be a template from the state, but take that, input your company, like that's whatever applies to everybody, fill that out, and then kind of save that as, okay, here's my template that I need to complete when I have a new hire. So you can just pop in that employees, their specific pay and employment status, and provide that to them.
Okie doke. State exempt salary thresholds. Can you tell us more about that?
Yeah, nothing new here. This is just a reminder that some states have a higher salary threshold for the salaried exemption from overtime. So higher than what is required under the FLSA. So federally, they only have to be paid $684 a week. That's about $36,000 a year. But these states do have a higher threshold. Then don't forget the duties test. So just paying an employee a salary does not make them exempt from overtime. They must be paid on a salary basis. They must meet the minimum threshold salary, and they must pass the duties test. So what are they doing? Does the type of work they do actually qualify them to be exempt from overtime? Most of the time you're looking at the main exemptions, which are executive, and that's your managers, administrative, and professional. The Department of Labor has specific fact sheets on each of those, and they spell out exactly what those requirements are and even provide some examples. They're actually pretty straightforward to read. So you want to make sure that if you're in these, so if you're not in any of these states, you still want to make sure your salaried employees do qualify based on the duties test and then that federal threshold. And then if you're in one of these states, make sure that your salaried employees meet these thresholds, and they may have a different duties test. Like California, it's slightly different than what the federal one is. So you always want to make sure you're looking at that so the employees are getting basically the greatest requirement between the two.
For companies with remote workers across multiple states, how do we ensure they're applying the correct salary threshold?
Yeah, I think first is just to run a report of, your employees, like where they are and how much they're being paid. For our eBacon clients, we do have a report out there, active employees by salary, and you can just review that and it'll show you your people paid on a salary, sort it low to high and say, okay, who do we need to look at? And then if you're in one of these states, you can look and say, okay, is there anybody that we need to make a change to? So, and basically a change is you're either increasing their salary to meet the threshold, or you're changing them to an hourly non-exempt employee that's eligible for overtime. And if you're unsure if the employee qualifies for the exemption based on what they do, you really want to dig into those requirements and enlist legal help on that if you need.
Very good. And now we're on to everyone's favorite, California.
Yeah, I felt like there wasn't too much here, but heads up, we have 2 slides for them, so it is a little bit more. The first one does apply to all employers, so there's a new notice that must be provided. It's the Workplace Know Your Rights Act, and it's a written notice of certain rights regarding compensation, union organizing rights, and certain constitutional rights. The labor commissioner is supposed to have the template out by January 1st, and then employers are supposed to provide that by February 1st to all employees, moving forward to new hires and all employees annually. So that's something that hopefully you can just create one time. It's not employee specific, and then you can just provide that, like in our system, you could provide that electronically to your employees really easily. The other part of AB 294 is that employers must give employees the opportunity to designate an emergency contact in the event the employee is arrested at work. And that means either on the job site or during working hours. And you have to give them this opportunity to provide that emergency contact by March 30th of 2026. And then moving forward, if your employee is arrested, again, during working hours or on your job site, you must contact that person. The next one, AB 692, contracts in restraint of trade. These are our stay or pay provisions. So you think of, hey, I'm going to pay for your tuition, or I'm going to give you a hiring bonus, but you need to pay it back if you leave within a certain number of years. Moving forward, you're not going to be able to include that most of the time. So fortunately, this was not retroactive. So anything you have in place now can remain, that's fine. But January 1 moving forward, any agreements like that, you're really going to want to have those closely looked at by counsel. Basically, you can't include it, but there are some limited exceptions for types of debt that you can require repayment for, but only if the agreement is written in a specific way. So for example, tuition aid, if it's a transferable credential, say you're helping them with a bachelor's degree that has nothing to do with their work, but you're like, yep, we're going to do tuition reimbursement, and then your agreement is written in this very specific manner, you might actually be able to still put that in place and say, hey, if you leave within this amount of time, you need to pay it back. There's also specific provisions for a hiring bonus, but it is very specific to what that payment is for. and how the agreement needs to be written. And it's California, so I'm just going to say, hey, you're going to need an attorney to write that up for you to make sure that it's legal and you don't get in trouble for it and that it can be upheld. SB 642, wage transparency. I know we've gotten some questions about this already. This is for employers with 15 or more employees. This applies to wage transparency in job postings, which is already a requirement. If you have 15 or more employees, you must provide the anticipated salary or hourly wage for that job. All this law did was specify that the pay scale definition is a good faith estimate of the pay upon hire. So not something that they may get in the future. So I think some people out there were kind of getting creative and saying, yeah, it'll pay $40 an hour, but maybe not for 5 years. So you need to be providing what that pay will be at the time they're hired in the job posting. And the last one on this page, pay data reporting. So we already touched on this, that the deadline for this is going to be in May for employers with 100 or more employees or contractors. What has changed this year is that you must collect and store that demographic data separately from personnel records. So just let that marinate for a little while on what that means, because usually all of that stuff is combined in together, but that's the change for this year. Really just has to do with the collection and storage of that data. And just a heads up, I don't usually jump a year ahead, but I do want to let you know for 2027, there are expanded job categories. So with these reports, when we report your race and ethnicity and sex, and then the pay data, it's also done by job category. And historically, California has followed federal, and there's 10 job categories. Well, in 2027, California is expanding that to 23. So if you're already familiar with the matrix that you have to complete and the job codes that you have to come up with, or the code that you have to come up with for that specific combination of race, sex, pay, and job, it's going to get more complicated. So just a heads up.
Okay. And here we go. Still California.
Still California. Personnel records inspection rights. So if you're in California, you already have to provide personnel records to an employee or the representative that requested. Well, now we're adding training records. So they've specified that a training record is part of the personnel record and needs to be provided. Additionally, they've specified that specific information must be kept. So if you are providing training, you need to make sure you are retaining and recording the employee's name, the trainer's name, the date and duration of the training, the core competencies and skills that were covered, as well as any certification obtained. Workplace protections for victims of violence. So I mentioned this already for California. This went into place in October 1st for employers with 25 or more employees. And it basically just defines who is a victim and what is a qualifying act of violence. Last year, the state kind of combined two different crime victim and domestic violence laws and put them together, and now they're just further clarifying. What this does mean is that you're probably going to need to review any handbook language around those policies and make sure those are updated. Additionally, it specifies that employees can use unpaid protected leave, but can also use paid leave under the paid sick leave law. So you may also need to update your paid sick leave policy. So a couple things to look at when you're updating handbooks for 2026. And lastly, I hope this doesn't apply to anyone. It applies to employers with 75 or more employees, but also for anybody that is having a mass layoff of more than 50 employees in a 30-day period. So hopefully nobody here is going through that, but just as a heads up, there's already been, California has its specific WARN Act, which is different requirements than what's required federally. Written notices have always been required, but they have added some specific provisions that you must include and state if workforce development services are provided, include specific information about the local workforce development board, as well as statewide food assistance programs. So just some specific things that need to be included in the notice.
Well, clearly, California continues to lead in employment law changes. So, for non California companies, are there any of these regulations that might signal upcoming trends in other states?
Yeah, I think it's always a good idea to watch what's going on in California. But honestly, now kind of all of the blue states. So we're seeing some things that are popping up in other places that maybe California doesn't even have. But I think like the crime victim, like now I mentioned there were, other states that were adding and expanding those. Paid sick leave is a great example. California was the first state to have that. And now I think we've got like 25 states that have it. So just keeping an eye on that is a good way to stay abreast of what's coming up.
Very good. Well, let's review what we've gone over today.
Great. Sorry, just moving my information around. I look just giving you a moment to digest all of that good information.
That's a lot. It's a lot.
So you want to, I think, refer employees to IRS guidance for them to determine their own tip and overtime amounts for 2025. That might be frustrating for employees. But, and as I mentioned, for our eBacon clients, we'll be doing a blog post in the upcoming weeks, in the next week or two here on how we are going to be handling it. But for employers, there is IRS guidance out there, as this is something, it really is just a tax deduction and not something that needs to, for 2025, be provided on their W-2. I think employers should review their company's use of AI to find out who's using AI and how, and determining best practices for disclosure, and then obtaining consent at minimum when required, but it might be a good idea in other states as well. I repeat this every year: know your state's laws, and reach out to an employment law specialist if you're unsure if something applies. And lastly, update your employee handbooks as needed. Most states, you don't need to do this every year. There's usually not anything that needs to be added. California, this is an annual event. So, but if there's anything in here that applies or is new, or that you have a policy that's contradictory to something that's new, you'll want to make sure to get that updated.
Mm-hmm. Well, thank you, Andrea, for this really valuable presentation. It is very difficult to move into the new year with all these changes happening. But let's move to our Q&A session with questions submitted through chat. But I also have a few questions that were submitted beforehand. And if you can think of anything while we're talking, we can certainly address them. What I'm looking at first, Kevin asks, where can we get access to the fact sheets for the duties test?
Yeah, so just Google, I'm going to do it right here, DOL exemption fact sheet, and I will tell you, sorry if so the one that you want is Department of Labor. So it's www.dol.gov. I love Google. It's working great. I Google DOL exemption fact sheet. The first thing that comes up, fact sheet 17A, exemption for executive administrative professional. And what that one is just an overview of all of them. It's a great overview. And then there goes into specifics. So 17D is the professional, and then they've got one like outside sales is 17F. But if you do just, let's see if this link, but Googling that DOL exemption fact sheet will get you there most directly.
Very good. Amanda has just a point she's trying to clarify. The exempt salary thresholds are for gross amounts. Is that correct?
Yeah. Well, so yes, and then so it's out. Yeah, basically that gross amount, their earnings, and then you get into like with the federal. You can do like an extra 10% for bonus. So maybe their salary doesn't quite hit that amount, but with bonus, like you can use 10% of that to get them up a little bit higher. So you're gonna want like it's always like go in and read the specifics on that. And they have those on, that's included as part of the fact sheet, is what the salary threshold is as well. But states, you'll want to look at those.
Awesome. Gina asks, you emphasize knowing where remote employees are working. So Our construction company has project managers and field supervisors who frequently work from home in different states. How do we track their location for sick leave compliance? And what happens if they move to a state with different requirements mid-year?
Yeah, so well, hopefully you know where they're at, especially if they're supervisors, where they're working and where they're living is important. But generally speaking, employment law, paid sick leave law, and employment taxes are all going to follow where the work is performed. So if they're working from home, that's the law that's going to apply. And then if they were to move, then the new law applies when they move. So it is important that employees are letting you know where they're working if they're working remotely, and then working different places based on where their job is, right? If you have different job sites, and that is actually taking them to different states. If it's short term, it's their home state where their work is usually performed is the one that's going to that you're going to have to comply with.
Very
Hope
good.
that answered the question.
Yes, and we have another question from Rita, and she says, with Delaware, Minnesota, and Washington implementing new family leave programs in 2026, and our company having employees in all 3 states, what's the timeline we should follow for registration, employee notification, and payroll system updates and changes? And how does Illinois requirement for paid lactation breaks affect our field operations?
Okay, so that's a big question. Okay, so let me start with the first part. So the paid family leaves. So hopefully, if you're actually in all of those states, I'm hoping your contributions are already going for Delaware and Washington because those have already been in place. But for Delaware and Minnesota, you're going to want to get those notices out to employees. So I would do that now because those are going to be effective for them to file claims. So do that now for January 1st and to provide those notices. And then your payroll contributions for Minnesota is what is also starting 2026, but Delaware and Washington should have already been in place. Lactation breaks for field operations. So this is a good point. Generally speaking, employers must provide this paid leave, and it must be provided at the employee's regular rate of compensation. However, if it would create an undue hardship, then possibly you wouldn't have to do it. So this is kind of what we see in accommodation laws, like disability accommodation. It's like you have to do these things unless doing so would create an undue hardship. An undue hardship is something that's going to be either like financial reason is usually not, I know it's not what you want to hear, but a financial reason is usually not a reason, but they would take that into consideration. But things like it puts an unfair share of the work on another employee, or let's say it's impossible. If you have a single, like a person, they're the only employee and working in a store, they obviously can't take a lactation break. They can't take a break at all, right? They're the only employee working there. So that's going to create an undue burden an undue hardship, that burden on the employer. So there are some exceptions. So for a field, it really is going to be very specific. And much like what we look at when we have a disability claim, it's very specific to the situation. Generally speaking, you're going to always want to do everything you can to comply. And if you're not, then be prepared to show, in case there's a claim, why you were not able to.
Mm-hmm. Very good. Now we have a question from Rachel, and the timing is remarkable because she asks, do you have additional information on the AB 889 and fringe credit calculations for prevailing wage? And Rachel, before Andrea answers the question, we are going to be having a webinar next month that is specifically on this topic. Like, it is the AB 889. That's what we're covering. There you go. Thank you, Michaela, for dropping in the webinar where you can go and sign up to actually watch it. But in the meantime, Andrea, can you touch base on the AB 889?
I'm going to actually let you guys handle that in the other webinar specifically for that. But if somebody does have questions, we can reach out to them, after the webinar, but I'm not going to be touching base on that one today.
Really
sorry
that you asked this question, and we're going to cover it. Awesome.
Perfect for that.
Rachel. Yeah, we'll look forward to seeing you there. And in fact, I think that we are going to wrap up today. Thank you so much for joining us. And we hope you found this session really helpful and that you're inspired to take steps towards better compliance management for 2026. Now, You are going to get a recording and free guides. But first, if you want our 2026 Payroll and Labor Law Compliance Guide, I'm pointing to the button. Download it right now. It is free for you for attending and get this guide. And we'll also be sending out the webinar recording, and we'll include a few free guides to keep you in the know. Thanks again, and we hope to see you at our next webinar. And you know what that is. It's going to be on the AB 889. All righty. You all have a lovely holiday, and thanks for joining us.